Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update, and this is for the close of business on Thursday, the 24th of January, 2019, about 4:40 p.m. Central Standard Time. Well, the grain market was pretty mixed today. We're getting mixed signals from our U.S. Secretary of Commerce, Wilbur Ross, who was on this morning and said the U.S. and China are miles apart. He came on later. I saw him, I think it was on Bloomberg, and he was then he's talking about intellectual property. It's easy to do the trade deals for the commodities. What's the harder thing is the intellectual property. And then Steve Mnuchin came on, I think clearing up what Mr. Ross had done first thing in the morning, saying, he thinks really good progress is being made. We know that the Chinese come into town next week. The big question for them, and probably all their other trade partners, is what about the intellectual property issue? How do you grow your country and make it a monster if people want to do business there and you take their intellectual property? Don't know that it's the best thing. And what about them? They're not exactly just manufacturers. You understand that. They're bright, and they are developing. They don't want it stolen from them. In any case, the stock market, a mixed signal today. The grain markets, I'd call it a mixed signal. We're starting to get our first information from be it companies like the old Informa and others as to how the grain acreage is looking. Remember, we're still not getting USDA reports, so we're sort of trading in the blind on some of these agriculture markets. You still have upside bias in beans as you're over the 18-week average of closes, and when you're over that number, that determines my bias to being up. If you're under it, that determines my bias to being down. It is not uncommon that if you move away from that 18-week average and on a good break, you fall back to it and try to find out where's your legs under the market, just the way you did here. I'm not saying it's happening, I'm pointing it out. Today you ended up with what's called an outside day up. The market closed higher on the day, and when I put the swing line on it, now I can say you've got the pattern of higher lows and lower highs, but then with today's high, that took it out. So we'll call it higher highs, higher lows. What would shake up the market? Excuse me. Taking out today's low would not be healthy for this market of 909.25. Why? You would break the pattern of the higher highs, higher lows. And I want you to look at where that battle is being fought, the 18-day average of closes. So now if you got under it and stayed under that, you could get a wave to the downside. Don't take it out. And what about the resistance? Well, that comes in at the upper Bollinger Band, which is going to slip a little, just like I can see how the momentum of the sideways action is going. Right now it's around the 929. So going home, how I view the market, momentum is up as measured by the slow stochastic. The bias is up because you're over the 18-day average of closes, and the swing line is up. The number I don't want to see taken out is today's low because it's the low of an outside day up. If you take it out, it often spells a problem. The problem would be because it happens right at the 18-day average, that might signal a move back to the 100-day average. The meal market is bothersome to me. Normally, when I'm looking for an uptrend in the soy complex, I'm looking for the meal to lead it. Actually, the oil's leading it as the meal's got a pattern of lower highs but higher lows. I'm not going to call it a trend. It seems to be trying to break out of the area of the 100-day and the 18-day average to the downside, but it's oversold. Is it going to have energy to be able to fall? Should the market get back over yesterday's high of 314.90 and close over that number, well, suddenly you might be saying, the market resolved to higher lows and a higher high over that number, it's back to bullish. You're at a very important area. In the soy oil, notice how it keeps gaining on the meal. There's big unwinding of that oil-meal spread that's been going on. This is a bullish market. It is overbought. It could embed, so keep your eye on it. There's no reason other than it's overbought for this market to do much. In the corn market, it threw out a sell signal today. And maybe some of this is we're starting to see acreage move out of soybeans back into the corn market. Why? because we lost our big customer. Half of our soybean export business was what, China? So you don't have them that way anymore. You've got them buying for state reserves, but they're not a regular buyer. If you're farming, do you want to count that a deal will get done? May not. So you're seeing a movement where you can make the movement. I'm not saying every acre can be moved. Lower highs, lower lows, bearish. The market's under both the 100-day and the 18-day average. Bias down and momentum turned down. If the market breaks, maybe it gets to the lower Bollinger Band, resistance back here at the combination of the 18 and the 100-day average of closes. In the wheat market, I've talked the past 3 days that I thought the market was running out of steam up here against the 100-day average and the Bollinger Band, and today it did that. That doesn't mean the trend is over, but it's an overbought market that hit its upside targets. It acts like it wants to pull back. In the sugar market, we have divergence. We have the swing line pointing to lower highs, lower lows, but the market's staying over the 18-day average, and it's embedded. Here's what I mean by embedded. Both numbers that make up the slow stochastic here are over 80, and they've been that way. Now, if they lose that reading, where just one of them, the K line, the red, closes under 80, all it's saying is probably back to the 18-day average. In other words, I don't see anything that's bearish. The question is, has the market spent its bullishness? Until it has, it hasn't. This rules the day as far as I'm concerned. In the coffee market, I had one of my brokers come in today and say, Ira, I was looking at coffee. I'm quite friendly. I said, so am I. I said, the problem's been if you buy it here, you got to keep stops, about $800 away. That's a pretty big risk. I'm not saying it's not right. So we were talking, and this was early in the morning, and I said, I'll bet you're going to make a run towards that upper Bollinger Band, and that'll be where I think the pros are going to step out a little bit. Today you hit it, and now the question is, what do you do with it? Are they going to step out or just stay in the sideways action? And when we were talking, he's saying, give me a trade idea. I talk about that in my morning videos, not here. That's the subscriber video. In the cocoa, again, the 100-day average lower Bollinger Band. Even though you're down here, you're oversold. It's a hard market to want to get short at those prices because it's hit the downside targets. Do you want to sell an oversold market? That's up to you. I see resistance back up here, but I don't see the pros adding new shorts right now. In the cotton market, it's just sort of drifting. It's a difficult market. If it takes out yesterday's low, what are you doing? Going back to the 18-day average? If you close under the 18, then you can argue maybe there's more downside over here. I don't know. We're not getting a lot of reports, as I said earlier, from the USDA. I have no idea what cotton acreage might or might not be. It's a difficult time to make some decisions. The cattle, we've got cattle on feed coming out, lower highs, lower lows. I don't know, you're just neutral at the 18-day average of closes. All you did in the feeder cattle, you hit your downside targets, you extended into an oversold condition, you began a correction yesterday, and if it kept going, the 18-day average, I think, should be a resistance point. You went to it, and you sort of stalled out. In the hog market, I'm starting to hear in our firm that a lot of people fundamentally want to get very bullish this market. I don't know why, but I'll find out for you. But the market to me has hit its downside targets. It's oversold. I don't believe that it's wise to start selling fresh under Bollinger Bands, and that's what this market's saying that you have to consider. Now, as I mentioned to you, one of the things I do every morning, I start out my subscribers. You're not a subscriber. This is, if you're watching me on YouTube or other areas, I don't call this a subscriber video. My subscriber video looks like this. It's got black screens. I am not in the video, but I start you each morning. I'm going to start you off so you grab a cup of coffee. The video is about 15 minutes long every morning. And I review in a very certain manner, in a certain sequence, 40 charts. The stock indices, the foreign currencies, interest rates. The reason I do it this way, you're able to grab the bottom of the video if you want to get to the area you want to look at. Maybe you're not interested in these. Maybe you don't want to see the soft commodities. So when I begin them, why are you watching the end? Or you like the indices, the currencies, and the energies. Watch those. You'll see as I move on to the next part, move to the other one. Instead of recording a separate video for each, it's much easier to do it this way. And in this video, the beauty is because It's user ID, password protected. I am able to talk the way I really want. I can talk about chart action, what the pros are doing, the technicals, fundamentals, and I can throw out trade ideas. So the first thing in the morning, I'll throw out day trade ideas, position trade ideas. You're going to hear an awful lot. Expensive? Not in your wildest dream. It's about 40 cents, 35, 40 cents a day. It's $7.95 for the first 30 days, $15 if you want to stay month to month after that. And I'm even thinking now, but we're getting a lot of subscribers to it, maybe we'll offer a yearly subscription in between that $7.95 and $15. Look for words. There's one more thing before you leave me. With it, we are able to give you our QT Mobile. So if you got a smartphone, you're going to be able to get quotes. You're going to see my videos. A notice will appear right on it as soon as I send the video. Just click the notice. It's going to open up our smartphone application. You'll watch the video. You'll see quotes and so on. I think it's a pretty darn interesting deal, and it's certainly inexpensive enough. Give us a call. You can go to our website. Under the word education or research, look for Morning Subscriber Video. End of discussion. Click on it. You're able to go in. You don't need a coupon or anything. Sign up. What do you got to lose? $7.95 for 30 days? I'm Ira Epstein. You have a good day. Talk to you tomorrow.